All right, I'm going to start with something pretty bold. Just about every portfolio app out there is lying to you. Now, look, it's not like they're trying to trick you. It's just that the way they're designed is, well, it's fundamentally broken. It hides the most important information you need to actually manage your risk.
So, how are they doing it? It all comes down to something I call the blended average trap. Seriously, this is like the invisible enemy hiding in your portfolio. And today, we are going to drag it right out into the open. And this right here, this slide shows you exactly what I'm talking about. On the left, you've got the illusion that most apps give you, a nice, comfy portfolio-wide return of plus 65%. Feels pretty good, doesn't it? But on the right, that's the dangerous reality. What you don't see is that a great trade in one account is totally hiding a disaster in another. I mean, a position that blew right past your stop loss and should have been sold ages ago. That's the trap.
So let's break down exactly how this trap works, because I promise you, once you see it, you can't unsee it. Let's get into the nitty-gritty of how these averages are hiding the danger right in plain sight. Okay, let's make this super concrete with a real example. Say with INFI stock. You bought your first batch in Zerota at 1600. Awesome. It's up over 11%. You're feeling good. Then later, you decide to buy more, this time in Upstocks at 1900. Well, that position is now down over 6%, which should be a big red flag for your stop loss. But what does your app show you? It mashes them together and says you're up a comfortable 2.5%. The warning sign? Poof, it's gone. The danger is totally hidden.
And this, right here, this is the whole point. A stop loss only works if you tie it to the specific decision you made when you bought the stock. Think about it. Your purchase on Zerota was one decision at one point in time. Your later buy on Upstocks was a totally separate decision. Blending them makes your risk management completely useless. Okay, enough doom and gloom about the problem. Let's actually talk about the solution. This is where a tool that's built to avoid this trap comes into play. And it all starts with the Holdings tab. Just think of this as your new command center for total, absolute clarity. And boom, here it is. This is the fix. Instead of one mushy blended column, you see everything broken out. One independent column for each and every broker. Every single trade stands on its own, with its own profit and loss. And that means a loss in one account can now never hide behind a gain in another. The trap is officially gone. But you know, being a great investor isn't just about a simple profit and loss percentage. It's about how hard and, more importantly, how fast your money is working for you. It's about the velocity of your capital. And that's exactly what XIRR, or annualized return, shows you. Just take a look at this. It makes it so clear. A 35% gain sounds fantastic, right? But if it took you 5 years to get there, your money was only compounding at about 6% a year. But look at this other trade, a smaller 25% gain, but you got it in just 6 months. That's a massive 45% annualized return. So let me ask you, which one is actually making you richer faster? Yeah, XIRR cuts through the noise and gives you the real answer. But this is about more than just dodging bullets, right? It's about arming you with the same metrics the pros use. For example, the PEG ratio. It tells you in a second if you're paying too much for a company's growth. These signals and score columns, they show you if a stock has powerful market momentum happening right now. And my favorite, the index B column. It gives you a simple yes or no answer. Is this stock actually beating the market since I bought it? You know, spreadsheets and numbers are great, but sometimes you just need to see the story of your portfolio. So let's check out how you can visualize your entire investment journey. So welcome to the Charts tab. The whole idea here is that you can ask pretty much any question you have about your portfolio and get a visual answer instantly. With a dozen different chart types, you can see your concentration, your real performance, and exactly how your money has been put to work over time. Think of every chart here as an answer to a question you should be asking. The composition donut? That answers, hey, am I too concentrated in one stock? The XIRR bar chart answers, what are my actual best performing assets? The journey chart shows you the whole story of your wealth growth. And the broker comparison? It tells you flat out which of your accounts is making you the most money. All right, so you've got a crystal clear picture of what you own. But what about what you should own next? For that, we turn to the watch list, which, well, it's less of a list and more of a full-blown research terminal. I mean, look at this. This isn't some simple list. It's a massive 23-column research desk that puts institutional-grade data at your fingertips. And the best part? It puts your existing winners right alongside the new ideas you're looking at, so you can ask that crucial question, is this new stock really better than what I already own? And it gets even better. You've got this built-in traffic light system. It just instantly flags if something looks too expensive or if the quality might be iffy. And these little trend badges, they give you an at-a-glance view of whether a company's sales and profit momentum is speeding up or slowing down. It's all about making smart decisions fast. Okay, so we've been deep in the weeds on individual stocks and brokers. Now let's pull back for a second to see the 30,000-foot view, and then we're going to dive right back in to see how you protect it all. This little thing here, the overview pill, this is your master number. It takes everything, all your Indian stocks, your global funds, your mutual funds, all of it, and rolls it up into one single unified number in your home currency. It's the one number you need to see your total wealth across every single thing you own. And this is how you protect it. While the overview gives you that big picture, the stop-loss engine is down in the trenches, watching every single trade like a hawk. But the real magic, the part that actually lets you sleep at night, is this. That little icon in your browser, it turns red the second any of your rules are broken. You get notified of danger without ever even having to open the app.
So what's the takeaway here? It's that this isn't just about a tool, right? It's about building a more disciplined process for yourself as an investor. It's about leveling up your game. And honestly, getting started couldn't be simpler. You just install the free Chrome extension, you paste in your tradebook CSVs from your brokers, it figures them out automatically, you hit refresh to get all the live data, you set your own personal stop-loss rule, and that's literally it. The system just starts watching your back, silently, in the background. So this all comes back to that very first question I asked. Right now, when you look at your portfolio, what are you seeing? Are you seeing that comfortable blended illusion? Or are you really seeing the hard truth behind every single one of your investment decisions? Look, it's time to stop letting those averages lie to you. It's time to see the truth. You can get started completely free right now at finmagine.com/portfolio-manager.php.